Everyone, my name is Risha. Today is the 7th of January 2023 and I'm going to be making my weekly prediction for SPY. As usual, we'll be going over the monthly, weekly, and finally the daily charts, and then switch over to the Excel sheet to then review last week's prediction and obviously go in more detail this week's prediction by also analyzing the option chain. So, before getting into the video, it's important to make the disclaimer that all information here is completely educational and therefore it's important to conduct your own analysis before entering any position in the market in order to ensure that you are perfectly comfortable and just not only use this information that I provide and specifically conduct your own analysis before entering any market or position. With that out of the way, let's get into the video. So if we switch over here to the monthly charts, we can see that the month of December, along with the month of November, was extremely bullish. We can see these 2 months have clearly broken almost all of the resistances. However, we saw that towards the end of December, it was very, very close to the almost all-time high of SPY, which is at 480.06. So, however, at the start of the new month, January, the stock price has gone down quite significantly, with December closing at 475.31, and the current spot price is already at 467.92, so it has gone down quite considerably just in a single week. So, immediately we can see from the monthly charts, however, until now, this is a very, very bullish signal. However, when we do go over the option chain, we'll see that during this time, and even still now, SPY is extremely overbought in the option chain as well. So, although we can't predict on this month yet, we can see from these previous 2 months that they have been extremely, extremely bullish. And if this is to continue, there's a good possibility that there will be a very strong resistance at the all-time high of SPY. But that's all we can get from the monthly charts. So let's switch over to the daily charts and see this in a bit more detail. So, as we can see last week, there was again another spinning top doji kind of candle. We've had quite a lot of those for a while, and there's been no real candlestick signal except for this one, where the market after that has just been soaring upwards. However, this week we can see there had been a gap downwards at the start of the week, and the market did go up a little bit, but it eventually ended up closing, and finally after a while we have a significantly or relatively large bodied candle on high volume too. Relatively high volume, that is, since the last 2 weeks volume were going down and this week's volume has pulled that volume back up. Although again we still don't have candlestick signals, we can see that the RSI has shot downwards, so the average obviously is still continuing to go upwards. But again, we don't get too much from the weekly charts, but we can say that to be safe, the market does need to either break this high or even the trend line, but that might be too conservative. Since the market is to go upwards, we want to capitalize, so we will be taking the high as the resistance, since the market has shown pretty decisive bearish action this week. So the high here is at 473.67, which will be the resistance, and obviously if the market continues to go downwards, which when we go to the option chain seems a lot more likely, is that the low will be the support here at 466.43. When either one of these are broken, obviously a trade will be entered. But now let's go to the daily charts. So you can see obviously the first day there was a gap down, an opening gap, which was later filled a bit, not too much though. It did actually end up breaking the low of it, but then the market went quite far down and got pulled up a little bit above the open. So that day, again, we had like a doji type candle, nothing decisive. And the volume was high too, by the way, relatively high. This is the highest volume on the week. But then we can see the volume has consistently gone downwards the rest of the week. But we did have 2 red candles and gaps, obviously opening gaps, which did end up pushing the market far downwards, and the weekly candle that we saw came from that. Notably, the average of the RSI has now gone below, but the RSI is continuing to go lower. So we can say that the RSI is supporting a bearish move right now. That's all we get from the chart. So let's switch over to the Excel sheet where we can see this in a little bit more detail. So last week, we did end up making a little bit of a profit since we sold on the 4th with an entry price of 468.3, quantity 240, and our total exposure was 112,392. And our exit price was 467.92, so we did make a very small profit of $91.2. our weekly closing balance has gone up slightly at 112,669. But this week, however, we're still at no trade yet. We wait for the candle's breakout. We buy when it crosses the high, which is at 473.67. Sell when it falls below the support or the low of this candle at 466.73. Target of 1%, trailing stop loss. If we are in a position and no boundaries hit, either stop loss or target, then we just close on Friday. So max OI for the weekly expiry is 495 for CE at 40,086 and 465 for P at 33,893. The weekly PCR is 1.07. Max OI for the monthly expiry is 470 for CE at 62,097 and 430 for P at 228,067. And we can see that monthly PCR is 1.72, so it's extremely overbought. So when these positions start to close, they will end up causing a strong bearish rally. So that is something to keep in mind. But as of now, of course, the weekly and monthly trend is up. So that concludes my video this week for SPY. Of course, thank you for watching. Enjoy. And if there are any changes to this video, they will be covered on the channel. But until then, thank you for watching and enjoy. And I'll see you in the next video.